It has been a busy week for Trump, who was arraigned Tuesday on 34 felony counts in New York City. In the latest setback for the former president, Trump administration senior officials have now been ordered to cooperate with the Justice Department January 6th probe. And joining us now is SkyBridge Capital founder Anthony Scaramucci, who served under Trump as White House communications director. And Anthony, great to see you this morning. Thank you for joining us. Got to talk about the news of the week, and that is Trump. We've seen the indictment now, and I guess expectations are running in a couple different directions, especially with respect to the implications for the Republican Party. Having served with him in the administration, in the Trump administration, I'm just wondering how you see it, sir.
Well, I mean, listen, I think I have a little bit of a contrarian take. I don't like the case. I think the case is being brought against a former president. It needs to have more meat than that. There's technical things in the case that lawyers really understand between misdemeanors and felonies. There was a little bit of a conversion there to extend the statute of limitations. I don't necessarily think that was fair either. So that notwithstanding, I certainly don't want Mr. Trump to be president again. He doesn't have the executive management skills to handle that job, and there's just too much negative attention associated with him. And of course, he would do things, I think, that would be very harmful to the United States. But the case is not a great case. I think the Republicans would do way better if they found a better messenger for their movement, a younger person, probably with better, fresher ideas. The country has changed. We have this beautiful, colorful mosaic of demography in the United States. It's a very different country than it was in 2016. And I think we need a Republican Party that has an entrepreneurial candidate that sort of cuts the ideas of that party to shape and reflect what's going on in our population. So hopefully that will happen. That's clearly not Mr. Trump. But I will say one last thing. He's got an avalanche of things coming. He's got the Georgia situation coming and a likely indictment there, the J6 situation, and of course, the document situation, which there'll be a lot of hypocrisy about, because if they go after him for the document situation, well, they'll have to go after other people like President Biden. So we're in a little bit of a mess, as we usually are, but it's an amazing country, and I really do have a lot of reasons to be optimistic for things in the future, but it's a rough period of time right now.
Hopefully a more informed country over the time that these cases continue to move forward as well. Considering the other cases that you mentioned here and kind of looking past what's taking place, as you kind of called the New York case, a very weak one, which has been the commentary and been the broader thinking around what even took place this week. But still, you've got the Capitol riots case, you've got the 2020 elections case, of course, in Georgia as well. So with all of that considered, and how the GOP will also need to shape their own future considerations for who the party nominee is, should then the markets also be taking off the table any possibility of a Trump presidency or a Trump nomination from the GOP in the future?
Again, I have a contrarian take. I think he drops out of this race before the Iowa caucuses. I think you've got the additional indictments coming, which are going to be very distracting and time consuming. And, people don't like me saying this about Mr. Trump, but he is a family person. He may have a dysfunctional family, maybe a little bit of a weird guy, but he ran a family business with his family, the Trump Organization. He ran a reality show just like that as well. He ran the White House with his family. And his family is conspicuously absent here. And remember, these are cases, at least the ones in New York, about personal indiscretions, which I think is also causing him some personal strain and anxiety. So the combination of those things, I think, take him out of the race. But as you and I both know, anything can happen in America. Could he get the nomination of the Republican Party if he stays in the race? Well, then I predicted he would get that, because they'll have 7 or 8 Republican other candidates in the race. They'll each mete out 5-7% of the vote. He'll get his requisite 25% of the vote. He'll get the nomination. But I honestly don't think there's a path to the presidency for Mr. Trump, given the changes in the demography and given his approach to campaigning, the style, the rhetoric, the hate speeches, all that stuff. But anything can happen in America. We both know that. I don't think the market is really thinking about that right now. The market seems more focused on the macro dynamics around the Federal Reserve, the cause for fighting inflation right now, and what's ultimately going to happen as the economy heals from the COVID-19 situation.
Yes, and let's talk about the Federal Reserve and the markets. As we have you here, we were just talking about some economic data this week, especially with respect to payrolls, PMIs, manufacturing and services data coming in a little bit weak. And then you have the Fed that still has to fight inflation, achieve its dual mandate. Just wondering where you see the markets right now.
Well, listen, the bond market's telling you that the Fed doesn't have a lot of room left to fight inflation, that they're going to probably have to let it go and maybe move the target. Other people, people I respect in the hedge fund industry, believe the Fed and think the Fed will stick to this 5% interest rate handle, possibly a little bit more to fight inflation. I actually think there's great irony here because the inflation is going to come down one way or the other. We have all of this induction of new technology coming into the marketplace. The reconnection of the supply chain post-COVID-19 is going to push the prices down. And so the Fed's going to win that, even if they don't move more excessively as it relates to interest rate hikes. A big problem for the United States we have to address is 38% of the debt is rolling over the next 2 years. You'll likely pick up a 300-400 basis point handle in interest rate expenses. That could take U.S. interest rate expenses up to what we spend on our military defense. So I would be a little bit worried about that and cautious about that. Unfortunately, you've got a push-pull system going on in Washington right now. The Fed is trying to fight the inflation, but the Congress and the president just passed a $1.7 trillion spending bill, which increases demand and pushes prices up. And so there's a little bit of a lack of coordination between the monetary and fiscal policy. My recommendation would be we need long-term thinking, a bipartisan commitment to bringing down the deficit. We did that in the early 90s with the pay-as-you-go legislation that was adhered to by George W. Bush's dad, George Herbert Walker Bush, and Bill Clinton. Remember, that led to a surplus at the end of the year 2000. But unfortunately, we've lacked that discipline in the last 20 years. We can get it back, but it would really require a bipartisan coordinated effort. And the only thing these guys seem to be agreeing on is the fight with China. That seems to be the only thing that these two parties like joining forces on. But there's other things that we need them to join forces on, frankly.
Anthony, my apologies. Just want to go backwards for 1 second here. Given the fact that we had learned a lot more over the recent weeks about Trump's business dealings and some of the business practices kind of being elucidated through what this proceeding has looked like even thus far early on, you've got a lot of investors that are out there looking at SPAC stocks like DWAC, Digital World Acquisition Corp., which of course tied to Truth Social, the Trump-led social media platform here, where he's been kind of the harbinger of some of his own outbursts against the legal proceedings and, of course, so many other things under the sun. But at the end of the day, is there anything that investors in a ticker symbol like DWAC should be heeding from what's coming to light about business dealings from the Trump organization over the course of this week?
It's a really good question. I'm not close enough to the situation. Obviously, the market is telling you that there's something wrong there. It's a really good question. I think you're also bringing up a point that's worth adding. If Alvin Bragg, the district attorney here in Manhattan, has more information that hasn't been elucidated yet in that indictment, I think it would change my view of the weight of the case. And so there could be things going on that you and I don't know about yet. And perhaps there are market participants that do know about them and they're acting in the market on that information. But I don't have that information. Just on the case prima facie, the way it looks right now, if you're going to bring a case like that against a former president, you got to be super careful, because what you don't want to have happen in a country like this is still amazing country, rule of law country, great entrepreneurial culture in this country, great tradition of adhering to the fairness of the law. You don't want our political people building jail cells for their political adversaries. We don't want to go down that path. Once that starts, it's a very slippery slope. And so I think the threshold and the standard for these sorts of things has to be very high.
Understood. Just had to get that question into you. I do want to come back to the markets, though, very briefly here. Even as you kind of manage your own portfolio through some of the volatility that we've seen over the course of let's round it out to the past kind of 6 to 9 months here. More largely, where have you been kind of doing some portfolio pivots, some readjustments? And what have you been hearing from investors, even in your funds right now?
Well, listen, I had a tough year. I think it's fairly well documented. I mean, your competitive media outlet writes an obituary about me every 2 months, apparently. But
they did one a couple hours ago. Yeah.
Yeah, of course. Yeah. And so she'll probably write another one. She wrote one in January. She's writing one here in April. She'll probably write another one. But I'm not going anywhere. We've got a great business. I'm 35 years in the industry. SkyBridge is 18 years old. We had a very difficult year last year. We were down about 37.5% after the audit was completed. We're up about 10% now this year as a result of good performance in the first quarter. I like the way we're positioned. If you look at the filings, you'll see that I'm adding personal money to the fund every single month. And so I'm very encouraged by what we're seeing. When you step back and look at our portfolio, it's a fairly transparent portfolio because it's a registered fund. We have great names in there, some of the world-class hedge fund managers, and we have some digital asset exposure, which I think we're going to be proven right upon. It's just an early adopting story, and with early adopting stories, there comes some volatility. But I think the long-term investors in SkyBridge will be rewarded, and I think we're very well positioned given what's going on right now. You have a regional banking crisis in the United States, and there is a crisis of confidence related to deposits and how the Fed is going to handle these things. There will be a move, maybe slowly in the beginning, but there will be a move for diversification into more digital assets, specifically things like Bitcoin and Ethereum. And I'm very proud to hold those things, and I'm very proud to take the heat and stand before people. I just found it very telling. The biases in that article. I'm in the business 35 years. They couldn't find one person to say one positive thing about us, and that's fine. I mean, I've heard a lot worse, though, guys. Remember, I've been in the political system, and until you've been parodying on Saturday Night Live, you don't know what a real roasting is. And so I know how to take the punches. We'll be here, and I appreciate you guys bringing me on this morning.
Well, Anthony, let me ask you, what's the path forward for SkyBridge with respect to crypto? You've had to introduce some redemption limitations. Are those pending here? What happens with crypto prices as they rise, and what happens if they fall? For instance, if there's a fallout with respect to Binance?
Yeah, it's a very good question. But I mean, again, provide context around that article and just the facts. I think it's very important not to have this thing be overly biased. We have in our prospectus the right to move our tender. It's a closed-end interval fund that tenders every 6 months, and then pursuant to the board and our recommendations and so forth, we can have a 5% tender or a 25% tender. We reduce that tender primarily because of the zigging and zagging that sometimes takes place in the wirehouses. There was a buy on that fund in February. They abruptly move it to a sell 4 months later. And we have a lot of privates in that fund. And so 33% of the fund is private. As a fiduciary of the fund, to maintain the integrity of the fund and the consistency of the percentages around the portfolio, we have to do those things from time to time. In the 21 years that fund has been open, the average tender is about 20%. There's been 8 or 9 periods of time where we reduce it to 5. And by the way, every single time we reduce it to 5, it was beneficial to the investors. You guys remember the 2008 situation. Investors that held on more than made their money back and got very high returns. Now, you're asking about the volatility in the crypto markets. Bitcoin's down from 100 vol. It's probably a 50 vol asset right now. There is Bitcoin in that portfolio through some of our hedge fund exposure. I would guess right now that we're through the bear market. And again, that is a guess. We don't know. But any time that you've held Bitcoin in a 4-year rolling interval, so you pick the day, hold it for 4 years, you've outperformed every other asset class. We made that position. We made that investment in November, December of 2020. We are up on that position. Now we're down from the high, and that's what gets all the press because the press likes car crashes. But we're up on the position from November of 2020. And let's see where the position is as we enter into the halving cycle in February of 2000 or April of 2024. I like the odds there. And you mentioned Binance, so I think it's worth mentioning Binance. It is a super important centralized exchange in our industry. If something happens to Binance, I think there will be a short-term hit. We were talking about FTX at the opening of the show. You guys know I had a relationship there with Sam Bankman-Fried. When FTX went down, it hurt the crypto market, but it was a temporary hurt to the market. I think Bitcoin got to 16,000. It's now well through where it was on the announcement of that debacle. You guys may remember something called Mt. Gox that failed in 2014. 60% of the Bitcoin trading was on that exchange. People say, well, that's the end of cryptocurrencies and Bitcoin. Of course, that didn't happen either. And I wish CZ well. I know him personally. I like CZ. I hope he sorts through whatever these issues are. I certainly don't want to see anything happen to Binance. But I think people need to understand that the ecosystem known as the cryptocurrency markets, Bitcoin, Ethereum, et cetera, are very resilient. And there's a lot of pent-up demand coming into the space. You can just see it in the on-chain analysis that we do at the firm.
Yeah, in aggregate, it hasn't been a good 6 months for some of your most high-profile homies there, Anthony. However, at the end of the day, I mean, one of the things that you are focused on, we know for so many of the investors that you answer to as well, is just how you find some of those pivots, how you continue to find value even in these markets, distressed as they may be in the most risk-sensitive parts of that, and especially in crypto here. And I've even been tracking CRPT. I just wonder, even within the resilience that you're talking about, more broadly internationally, what the playbook is going to be for crypto still remains to be seen in some other large economies of scale right now. And so that considered, is there any hesitation? Is there any pause? Is there any pulling chips off the table that you feel like needs to be done right now in advance of another shoe dropping internationally on crypto regulation?
Listen, again, these are great questions. It really depends on your time frame. I don't think this is really an asset class that people should be trading. I think one of the problems with the asset class, unfortunately, it's a brand new asset class in the sense that it's a new technology. And what happens is you get these boom bust cycles and you get the introduction of a lot of charlatans, which has obviously caused this regulatory snapback. And so, yes, there could be more regulation. But when you look at an asset like Bitcoin, it's very decentralized. And you're mentioning the international community. While some of the regulators may take a tough stance on Bitcoin, I can tell you the general population, particularly off the shore of the United States, where they've lost confidence in the governmental-based currencies, and you've got billions of people in places like Africa, South America, elsewhere that are unbanked. I think you're going to find that there'll be more and more people adopting Bitcoin in other cryptocurrencies. So the demand is there. To understand the database that Bitcoin represents, it's immutable. And if you really study the history of money, what has happened to us with money, it is basically the technology that we're using to avoid bartering with each other. But the money is always getting corrupted by the government. You now have the opportunity to use technology to prevent that. And I think there's a big market share for that globally. So we're in the cross currents of all that. It makes it very interesting. The asset class is up a lot this year. I think Bitcoin's probably up 70% on the year. And I don't think it's time to take chips off the table. If anything, I think that this is the beginning of a new era for Bitcoin and other cryptocurrencies. And so we'll remain patient and we'll remain disciplined to the approach that we've had for the last 20 years, which is to make a macro bet, sit patiently, and take the heat from the pundits and the critics.
All right, we got to go, Anthony. We really do appreciate the time this morning, though, talking through some of these matters here. I mean, we have to go, but Bitcoin, 1 million, yes, no? You think it's going to hit that?
Well, listen, I've been wrong about timing, but, I mean, if you ask Tim Draper or Kathy Wood, if this trades to where gold is or slightly better than gold, it's a 500 to $1 million coin. And that could happen by the end of 2030, of course. And so we'll see. Right. But here's what I want. Here's what I hope, though, guys. If I'm right, okay, because I'm taking a lot of public dunkings right now in the public scare. I'm even getting my personality attacked and all that other stuff, which is fine. I'm a big boy. But if I'm right, invite me back. Okay, if I'm wrong, you can also invite me back and throw eggs and tomatoes at me. But if I'm right, invite me back. It'll be fun to share that success with you and your viewers.
Eggs cost too much to be throwing them at anybody right now. SkyBridge founder and managing partner.
Tomatoes, the tomatoes, getting hit with tomatoes.
Thanks so much for the time. We appreciate it, Anthony.
You're welcome.